When I got started learning about investing in multifamily real estate, also known as apartments, I encountered a bunch of terms that were just new to me. Not only did it take me a while to find out what these terms meant, but I sometimes felt a little bit embarrassed by even asking somebody, hey, what does this mean? So, to save you time and potential embarrassment, I'm going to review the definitions of some basic fundamental terms when it comes to multifamily real estate. My hope is that you become much more aware and comfortable about investing in multifamily real estate. Hi, I'm Dan, and I'm an active real estate investor with hundreds of apartments, and I'm on a mission to help immigrant professionals grow their wealth passively through real estate. If you'd like a copy of my free guide on how to get started with passive real estate investing, just click down below in the description. So just to be clear, the terms that I'm reviewing today are just about the properties themselves. There are a whole host of other terms relating to syndications or financing or things like that I'm just not going to cover today. I'll get to that in a separate video. So for now, let's dive in. Multifamily. Multifamily is simply a term for a residential property that has more than one family living in it separately, each of which is called a unit. Anything such as a duplex, which has 2 units, all the way up is considered multifamily. Townhomes, for example, are considered multifamily because they share a wall. And multifamily real estate properties can be in one building or in many buildings, depending on how many units there are. The most popular and common type of multifamily real estate is apartments, which can range from, say, 5 units to hundreds of units. The investments I typically make are in apartment complexes of at least 70 units, but there's a whole range from small to large that you can get involved with. Units, or doors. I already mentioned the term unit, which really just means a separate space where one family lives. It usually includes a living room, a kitchen, perhaps a dining room, and 1 or more bedrooms or bathrooms. A door is the same as a unit. Think of it as like a front door. So if an apartment complex has 50 units, it has 50 doors or 50 front doors. Commercial versus residential. Multifamily real estate can be either residential or commercial. What's the difference? A residential property has 4 units or less. A commercial property has 5 or more units. Now, why is this important? It's an important distinction because lenders treat these two very differently. And so you can get different types of loans based on whether they're commercial or residential. And that's important to understand if you're an active real estate investor. I created a whole separate video talking about commercial versus residential, which you can find in a link down in the description. Class. The class of multifamily real estate is also an important distinction. Class is short for classification, and it's one of 4 choices: A, B, C, or D. Each class represents a range of locations, amenities, price points, risk profiles, potential returns, you name it. Class A properties are the most desirable in the nicest neighborhoods with the highest end everything, versus Class D properties, which are probably in not very good parts of town, fairly run down, etc. And there's a lot more to it, but that's essentially A, B, C, and D and how they work. I will definitely create a video just on defining class because it's very important and it's something that you should know. So follow this channel to see it coming soon. Rehab. Now, you may already know what this word means, but I want to make sure I define it here just so that everybody's on the same page. Rehab is short for the word rehabilitation, which means to make changes to the property to improve it in some way. In multifamily properties, a rehab project that's small might be something like changing countertops or replacing light fixtures. Larger rehab projects could include installing a brand new bedroom or completely redoing a bathroom. It could also include outdoor projects like repaving a parking lot or adding a new amenity like a playground for kids. The list of ideas is really endless. So I've covered 5 basic terms that talk about multifamily real estate properties. Now I want to switch a little bit to talk about the financial piece of it. These terms are important to know because they're going to form the backbone of your understanding in real estate. Being an active or a passive investor means you need to understand it well because it is a business. Real quick, if you're finding value from this video, please share it with somebody that you think may find some value from it. It's word of mouth from viewers like you that will allow the message to get out to more immigrants. Now let's get back to the video. Income. Income simply means money coming into the property. The most obvious example of this is rent that comes in from the residents, but there are also a lot of other ideas in terms of potential income sources. Examples include pet fees, renting storage rooms or storage closets, parking fees, coin-operated laundry income, and many others, and this can add up to a significant number. One of the very important tasks a general partner takes on when they acquire a property is to really study what are the potential income sources and how can it be maximized. The higher the income, the higher the return for investors. Is there an amenity that you think perhaps your residents would love that you could charge money for? Well, maybe it's something to consider. Expenses. No business that I know of has income but no expenses, and apartments are no different. Expenses are what needs to be paid so that the apartment runs smoothly and efficiently over every month. There are a whole host of expenses, including repairs, ongoing maintenance, payroll for staff, marketing, landscaping, the fee paid to the property managers, perhaps some utilities that are paid by the landlord, and one of the largest expenses of all, which is property taxes. The list of expenses can be long, so it's studied very carefully to know what can be done to reduce it. Net operating income. Net operating income, or NOI, is an important term which simply means the income minus the expenses, but it excludes the debt like your mortgage payment, which includes principal and interest. Why isn't that included? Isn't the mortgage the number one expense you have as an apartment owner? Yes, it is, but it's omitted from the calculation, so it's easier to compare multifamily properties to each other. There are many ways to structure debt, so by removing it, you're essentially taking out a variable that can change quite a bit and allows you to compare profitability more equally amongst properties. Cash on cash. Cash on cash is like NOI, but it also takes into account the mortgage, which is huge. It's an annualized number that represents the amount of money you get back every year from your given investment. At a property level, it's simply the NOI minus the debt payment divided by the amount of money it took to acquire that property. If you're a passive investor, you would look at the money you receive from that investment over 1 year divided by the amount of money you invested into that property. This is a great number because it gives you a very clear idea of the amount of money you are earning from cash flow every month. Important return metrics. Some of the most important terms you need to know when it comes to real estate investing are some of these return metrics, which are internal rate of return, or IRR, annual rate of return, or ARR, and equity multiple. These are the primary ways that returns on multifamily investments are described, so it's really important to know. They're so important that I created a separate video talking about them, which you can click on right here to watch. Thanks for joining me on the Immigrant Wealth channel.